Alright, I'm going to go ahead and start the webinar or the review. Okay, so really a pretty fascinating day when you consider everything that's happened. And what I mean by that is, if you just look at the higher time frame charts, such as the daily chart, just look how big the range was. It really just the perspective. I mean, the range, we covered almost this entire trading range in the past 14 days. It's probably easier to see on the 60-minute chart. In one day we managed to rally pretty strong and then just sell off really fast. So, it's interesting because the character of the market kind of appears to be changing. And what I mean by that is, this happens a lot where you get strong sell-offs and they're always after some extended period of trading range, breakout mode behavior, and it always catches traders off guard. It's really, everyone gets into the habit of, things like this, a rally and then it just selling off. So it's hard to, when everyone sees this breakout, they expect it to fail, somewhere down here, so they get out. But, really, really interesting day. And, I like when the range is bigger. It's easier to make money, in my opinion. And it's just easier to take swings. So, Friday, last day of the week, you see, weekly chart. We almost, we tried to close under the low of last week, but we failed. So it's outside down, but it would have been stronger if we would have closed below these lows. I think more importantly, the bulls failed to close below the lows of ever since August the 4th. So they had a chance, and this was a warning right here, bad follow through. And no surprise, we rallied pretty strong at the end of the day. And that happens, it's hard to, markets have inertia, so they continue to do, what they've been doing, and it's hard to break below. When you've been in a trading range for so long, most breakouts fail, and even if they look really strong, well, most fail. And the odds are we'll get a second leg down. It's probably not a leg one pullback, second leg trap. It's possible, but I think we'll get a second leg down. And this is kind of one of those. It has an influence over, probably next week a little bit, but with that said, so I think we'll go lower. Ultimately, I agree with Al. I think we're gonna start testing down, probably to this breakout point over here, probably lower. And the reason why is the risk is just too big for the bulls. At some point, and this may be a sign that momentum traders are giving up. Value traders are not buying. It's completely momentum traders. Hang on one second. So, because of that, it would not take long, or would not take much to make the momentum traders give up. So, I think we're coming down to here. But, again, more trading range price action. The bulls had a chance, the bears had a chance to close down here and trap a lot of bulls from the past 14 days over here. And, why could they not do that? And the simple answer is they were not strong enough. So, is this the start of the sell-off? Maybe, but, just look to the left. It's trading range. Trading ranges are full of disappointment. All right, so looking more at today. Bar one, good bull bar, but big tail. We're trying to break above yesterday's high. Arguably second leg trap, probably always in long, but the question you have to ask is, if you're buying up here, it's probably best, I think a lot of bulls are going to scalp out if they're buying. That's because, top of a trading range, most breakouts fail. We're probably not going to get something like that. So I think most bulls will scalp out. And again, bar 2, even bigger tail, so more of a sign that traders they're scalping. Bar 3, close on low. I think anybody always in long from bar 1 or bar 2, I think they certainly get out below bar 3. At this moment, you have to think about it this way. We had a breakout above yesterday's, a major lower high or yesterday's high. And at this moment, it's probably best to look for a pullback because the pullback can be really deep. This kind of reminds me of Monday where we had big rallies and then we started to stall close to support. So you always had to be concerned and ready for something like this. So, and then again, bad follow through, probably buyers below, but they could be way, way down here. And then 3 bars down, probably sellers above and probably at least second leg down. Janet Yellen spoke on this bar, but, it's interesting. Even if you sold this close, at this point, at this bear bar, it looks like, let me fix that's going to bother me. That's better. Okay. So at this point, it looks like the bulls are failing, and this is a failed breakout of the trading range and on double top, whatever you want to call it, 2 legs up. So probably going lower. We may even test the open today. So it's an okay short. And price, I remember this bar. It went up a few ticks and then just started plummeting down really fast. And when you see bars like this, let me see if I can. It may be better to find a 1-minute chart. Yeah, okay. So, basically on the open of that report bar, it went up a few ticks and just shot down really, really fast. And when you see this, you know that it's a very big bar. It's very climatic. It's unsustainable. When you see very, very big breakout bars, a lot of times, especially when, it looks like a trading range, a lot of times price will close poorly. So, and that's due to traders selling aggressively. It's momentum traders and they're scalping out. So when you see a bar like this, if you're short, and you can get 4 points, great. But when you see it go all the way down here and then you start to see it, pull back, you have to be aware of, the possibility that report bars do this a lot. We had one last week that did sort of the same thing. Yeah, right here. And, we're rallying and we got a bunch of bars down and then we started selling off and price sold off really far and it went 1 tick below this low and reversed up. And I know it's easy to think how, that's so unfair, but it's momentum. Once it starts going down, eventually everyone agrees that it's gone too far too fast, and bulls see it as a value. So they see this as a brief opportunity to buy the low price. It's the same as when you get those crashes on on the news or daily charts when they sell off really aggressively and they just immediately turn back up. Just it's kind of like, I know this is kind of extreme, but it's sort of the same thing. Strong sell-off, and then with the matter of a few weeks, they turn back up. Crashes happen, even here, down and turn back up. Smart bulls see it as an opportunity to buy, and it all depends. I don't mean, yeah, like '08. Like I don't mean they will buy instantly, but they understand what's going on. They understand it's going to be a brief opportunity to buy at a low price. I think a good example would be this happened in the euro dollar. Kind of like things like this, strong, just crashes. This was when the Brexit vote was going on, and then price just reverses way back up to here. So anyways, I don't want to get too off topic with today. So anyways, when you see it and you see it starting up, you got to get out because it shows that bears were scalping. And then when you get this bar, we're probably going higher, but the issue is it's huge risk. If you buy the close of this bar, you buy above this bar, you're risking from this low to, probably this close. And you have to ask yourself, what's more likely? Are we going to go all the way up here before we get down to here? Probably not. So, one thing I want to pause right there for a second and talk about. I think the biggest issue most people make, starting out is, number one, they're very much scaling in is so appealing, just because if you do it right, you almost never lose, You can buy down, you buy this low, you buy more lower, you get out break even, or you sell this high and you sell 1 point higher, 2 point, 3 points higher, and you get out with a profit. It's easy to make money in a trading range, but the problem is most people cannot trade small enough to scale in. When they should be, they end up trading 4 contracts when they should be trading 1, and they tell themselves that they're going to use a wide stop and they're going to scale in lower, and they may risk 6 points per contract, and then when they scale in lower, they end up not using the correct stop because the risk is too big, and they end up getting out at the end of the pullback. It's kind of like, well, a great example of stuff like this. Bulls buy this close, they put their stop all the way down here, and the bulls that do it right scale in somewhere down here and they get out with a profit or break even. The bulls who do it wrong, they end up probably risking too much. They're trading too heavy a position. So they say, okay, I'm going to buy more, I'll buy it here, 1 point lower, down here, and I'll use the stop down here. Well, they're trading too heavy, so when it comes time to scale in, and we're down here, they go, oh my gosh. Or when it comes time to scaling over here, they freak out because their position's too big, and they end up tightening their stop to maybe below this bar because they think if they get stopped out here, they'll just get killed. They'll lose 2 weeks worth of profit, and they just can't do that. So they get stopped out right here, and they take a loss, and they watch it go right back up. So first thing is trade very small, and if you're starting out, just trade 1 contract. Don't scale in. Don't worry about it. Second, look for 4-point swings. Every day you can generally find a trade worth 4 points. So, you see this. Maybe you say, okay, here's a second entry buy. I'll buy above it and go for 4 points. And then you see this bar, you see the big tail, and you say, okay, maybe I'll just, I'll get out here, or I'll get out with, you say, gee, this is kind of parabolic. 1, 2, 3, so it's a wedge. 3 pushes up, here, here, and here. Maybe I'll just exit with 2 points or exit with 3 points. And then you see this bear breakout, and then you say, gee, it's going down. I'll just sell with 1 contract for my stop up here, and, Al uses the term jumping off a high dive. Your muscles are all tense. You just jump off the board and you just clench your nose. You sell here and you just get out right here. You can see a lot of traders did that. They sold here, put their stop up here, and they got out at 1 times the reward. And I know you're thinking, that's only a few points, and price just went all the way down here. That's missing a lot. Well, the key to it is getting really, really consistent and just hitting. I'll use the term, a baseball kind of analogy that Al talked about a while back, was just try to hit singles. You don't need a home run. Everybody wants to sell above this bar and get out all the way down here, sell this low, get out here, and then get out high tick. Everybody wants to catch huge moves, but it's hard to do. And you don't have to do that to do well. So to summarize that, I would recommend trading small and look for just simple 4-point swings, or, for something where the math makes sense. You don't have to go for 1 point. You don't have to go for 2 points. The next thing is really, really try hard not to sell low and buy high. So when you see this breakout, you look to the left and you say it's at the bottom of, a trading range. We're at the bottom of the lows from a few weeks. That's too big of a, there we go. Over here, we're at the bottom of all these lows. Selling low in a trading range. Don't do that. Look to buy. And it'll keep you on the right track. So anyways, I don't get too carried off with that. Here, if you're buying up here, you're buying very high. I think most bulls that are buying this, honestly, they're scaling in a few points lower and scalping out here. So wait for a pullback. Here's a high to buy. It's kind of an II. You call it a triangle. Bulls will buy above it, and it looks like a lot of them scalped. I'm just curious to see how far it went. So price went exactly 6 points higher. So if you bought above, you could have gotten 6 points plus 1 tick to get out. Here, when you look at this, very climactic. Excuse me 1 second. All right, sorry about that. I had to take care of something real quick. Anyways, get back to. Okay, there we go. So kind of lost my place, but anyways, really big buy climaxes. So when you see that, a lot of bulls, you got to ask who's willing to buy up here. So strong bulls have already made a lot as this is going up, and they see it as climactic. They see it as failing at this extreme over here, right here. So a lot of bulls are going to wait for at least 10 bars and 2 legs at a minimum, and they probably want to buy at the moving average. So you have to be aware of the possibility of this. We get a tight channel down. A lot of parabolic wedges, 1, 2, and 3, they form tight channels as they pull back. And then you get something like this, high to buy, or you can call it a wedge, 1, 2, and 3. But it's a very tight channel. The channel hadn't been, the trend line break hasn't been broken, and then, bulls will buy above it. Well, smart bulls will not buy above it. Let me put it that way. Bears will sell betting on this. So you always have to be aware. This happened on Monday as well, where you get, lost my place. There we go. It's over here. So here we go. You get this. You get these, yeah, okay, here it is. So you get a strong rally, and then you get a pullback, and you can call it a wedge, you can call it a high to buy, big tail, and they're probably a tight enough channel where you need to have a trend line break and then a breakout pullback, if you will. We don't get it. So smart bears, they see the bulls trapped, and they may wait a few bars, and the smart bulls who bought above will get out once they see hesitation, because they know there's the risk of this. Smart bears, once they see this, are going to start selling aggressively, trying to trap the bulls. This happens all the time. You get flags that, they fail. You get a bull flag that gets a bear breakout. You get a bear flag that gets a bull breakout. It happens all the time in trading range price action. And then we started, at this moment, character of the market started changing. You sell the close, stop up here, bet on the second leg down, sell the close again. But here, very big tails. We're back in this price area. We're close to the open of the day. We tested the open of the day. So you got to be leery. And we just keep selling off. And it goes much further than people expected. But, these tails, if you were in Al's webinar, you heard him say it. These are flags. on a 1 minute chart. So here's a 1 minute chart. You can see we get a sell-off, sideways, bear breakout. And then we get a, sell-off, sideways, bear breakout, sideways, bear breakout, another sideways. And this is kind of the final flag. So we got a flag, bear breakout, then it failed. So at this point, very extended, we're probably going to have to go sideways for at least 10 bars, 2-leg. Arguably, this was the 2-legged pullback. So the bears see, some bulls will just see this as the first leg up and this bear breakout. That's just simply a pullback from this. But to keep it simple, you had a lot of bears. Bears knew there'd be a second leg down, so they saw this rally as weak. It closed the gap here, sold off strongly, and then finally it touched the gap over here. That happened sort of yesterday on a much smaller scale. Bear breakout. We immediately closed this breakout point right here, and we had to sell off, and then right here we tested back this high, and at the very end of the day, right around here, we got back to this low. So, in here, a lot of bears, sure, you can sell this close, use a wide stop and get out somewhere down here. But, the problem with calling this a lower low major trend reversal or a higher low major trend reversal is it's really minor. It's not enough bars. We haven't broken above the moving average. So really, this is probably more of a major break. And Monday, we may pull back down to here and try to get some sort of higher low major trend reversal. If you think about it, it could form. So technically, you have a bear trend line break to a lower low major trend reversal. If we pull back and get a higher low major trend reversal right around this low, it would form a head and shoulders bottom. So left shoulder, head, and right shoulder, and the bulls would try for a bull breakout. But really, I see it as simply bottom of the trading range from the past few weeks. It's probably going to fail. We may get a second leg down and then come back into the range. But when I look at this, I see, it's just so easy for the bulls to buy the breakout, betting it'll fail and make money. And usually, strong breakouts don't do that. All right, so I'm going to open up to questions for the moment. So if you have any questions, just type it in the question box. All right, looks like no questions today, so hope everyone has a great weekend.